Forex update for September the 10th, and we're looking at a daily chart of the Euro US dollar showing this bear trend that we've been in now for 4 months. Yesterday we got very close to our target of 128.50.45. We bottomed just 8 pips above there at 128.58. We saw a decent bounce back, and this candle here is just slightly positive. The spike lower and the higher close, the close above the previous day's close. It's not the most bullish thing in the world, but having held that decent support with a relatively positive candle, and I also like the fact that we've closed above the 2-year trend line that was important this week. We actually closed above last week's low as well, so potential rally into the end of the week is certainly possible. We've got targets on the sheets, so I won't need to repeat them here. And of course yesterday's low, that 128.58 down to the 128.45 area, is going to be important. Just watch that. We could get a little double bottom there if we retest it today. Obviously we're oversold, we have been for a long time, so it's not massively relevant, but watch that low, watch that area in the 128.58.45 area. That's going to be key again for today. Obviously if break lower, well, that's just going to continue this bear trend, which is very, very dominant at the moment. Any rally at the moment triggered by yesterday's relatively positive price action is likely to be short-lived. We've got targets, as I say, on the sheet, and some selling opportunities on the rally if we reach certain levels. Cable hit excellent longer term support yesterday at the 160.85.80 area, where we suggested buying into longs with stops below 160.50. These stops were not activated. We bottomed out, I think, at 160.57. Yes, it was. So that trade's working quite nicely. We're back above the 161.00 area, and a slightly positive candle could be better, really. We'd hope for something a bit more positive than that, but at least it shows some sort of stabilization there on that daily candle. We are of course oversold, which helps, but holding that 160.80 level is now crucial, and if we can do that, we can build into a short-term recovery this week. Targets are on the daily report, so I don't need to repeat them here. Clearly yesterday's low is going to be important. We're going to have to hold above that 160.80.60 area in order to build that recovery. We are fighting against a bear trend here, so it's not going to be easy, and if we do slip below that 160.50 area, well, all bets are off and the bear trend continues. Aussie dollar, we warned very clearly on yesterday's report about the potential head and shoulders pattern. The failure to stay above this 200-day moving average, the 93.45.35 area, was important. This week we broke below there, and this neckline here to the head and shoulders is around the August lows in the 92.45.35 area. Once that was broken, triggered some heavy selling, exactly as we expected it would do, and we shot straight to our next target down here at the 91.80 level. We're actually looking like we're edging below that now as I speak, so today's close will be important. Let's see if we can hold above the 91.80 area. I must admit, it doesn't look good. There's no oscillator wise, it doesn't look very positive. You can see still pointing lower, so if we can't quickly regain that 91.80 area, it's going to be a problem, and we've got some downside targets on today's report for the next leg lower. If we manage to hold above 91.80, regain it quite quickly and close above there, well, yes, short-term recovery, but overall this pattern is very negative. I don't see any major recovery in this pair. Any recovery does look like a selling opportunity, and we're very clearly establishing a 2.5-month bear trend with this negative pattern. I really don't see it as positive in the longer term. Dollar yen's been pretty good lately. It always is on a technical basis. Once we'd broken above that 105.60.70 area, we shot straight to our next target of 106.45.55. We topped out there beautifully yesterday, bang on target at 106.47, I think was the actual high. So that's all worked very nicely. Getting a bit overbought now, yeah, 106.47, getting a bit overbought now, short term and on the daily chart. That's fairly strong resistance, so we've got to see if we get a bit of profit taking. It seems the most likely scenario. Perhaps into the end of the week we'll get a little bit of profit taking down to some good support levels for our next buying opportunity. Those levels are of course on your daily report. We'll have to clear 106.45.55 in order to push on for the next leg higher. I'm sure that will happen eventually, but maybe not this week.